In 1991, federal authorities in 69 countries simultaneously shut down every single branch of a bank, in a coordinated operation as if they were dismantling a terrorist network. But it wasn't a surprise, because the CIA had known for 10 years that this bank was a criminal organization, and yet they let it operate. In the next 27 minutes, you're going to discover the biggest banking scandal that never became a Hollywood movie, and understand why. This isn't another Lehman Brothers case where banks collapsed due to incompetence. It's not Enron where executives robbed investors. This is the story of a bank that was purposefully created to launder money for dictators, terrorists, and intelligence agencies. And governments worldwide, the United States, United Kingdom, France, had concrete evidence of this since 1980. But they allowed it to operate for 11 more years, taking deposits from retirees, financing mortgages, with branches in your city. Why? That answer will make you question everything you think about banking regulation. First, let me show you how this bank managed to fool the entire world. London. A charismatic Pakistani named Aga Hassan Abedi inaugurates the Bank of Credit and Commerce International. The name was already calculated to sound legitimate, nothing like First Bank of Pakistan that would drive away Western investors. BCCI had an irresistible proposition, the first truly global third world bank, headquarters in London, Luxembourg, and the Cayman Islands, but focused on emerging nations ignored by Western giants. And the growth was explosive. 1973, 19 branches 1977, 146 branches 1980, more than 400 branches in 78 countries. In less than a decade, BCCI became the 7th largest private bank in the world, operating from Pakistan to Colombia, from Abu Dhabi to Miami. But here's what nobody questioned at the time. How did a bank with no track record grow so fast? Major banks take decades to build that global presence. JP Morgan was founded in 1799, HSBC in 1865. But BCCI achieved in 8 years what took others centuries. The answer is simple. They weren't following the rules. They were creating their own. And before I show you exactly how they did that, you need to understand something crucial about the international banking system of the 1970s. Because BCCI's fraud only worked because of a regulatory loophole, so absurd it seems designed on purpose. And in a way, it was. When you think of banking fraud, you probably imagine accountants falsifying ledgers, hiding losses, creating phantom profits. BCCI did all of that, but their architectural coup was far more sophisticated. They exploited a fundamental flaw in international banking regulation. No single country had authority over global banks. Let me explain. BCCI had official headquarters in Luxembourg, lax banking regulation, holding company registered in the Cayman Islands, tax haven, zero transparency, main operations in London, prestige, access to European markets, subsidiaries in 78 different countries. So when British regulators investigated, BCCI said, "Our legal headquarters is Luxembourg. We don't have to report to you." When Luxembourg asked about something suspicious, BCCI responded, "Our real operation is in London, ask them." And the Cayman Islands literally had no regulatory structure. It was the financial Wild West. BCCI created the first bank intentionally impossible to regulate. But the legal structure was just the foundation. The real criminal operation happened in 3 layers. Layer 1, the legitimate bank, the facade. On the surface, BCCI operated like any normal bank. You could open a savings account, get a car loan. Their branches in London, Paris, and New York looked indistinguishable from any other street bank. This was the layer regulators saw. And apparently, everything was in order. Layer 2, the black bank, where the magic happened. But in parallel, BCCI senior executives operated a completely separate system of unregistered accounts. They internally called it Protocol A Bank. These accounts didn't appear in official balance sheets, weren't audited, didn't exist officially. And this is where the money really flowed. African dictators depositing stolen oil revenues, Colombian cartels laundering cocaine profits, CIA agents moving funds for unauthorized operations. A former executive who later turned witness revealed, for every dollar in the official books, there were $3 in Protocol A. Layer 3, The Phantom Empire. BCCI wasn't just a bank. It was a tentacular corporate octopus. They secretly controlled an airline in Pakistan, cotton plantations in Africa, currency exchange brokerages in Dubai, and a network of real estate fronts in Miami. All these companies existed for one function: to move illicit money without leaving banking traces. Need to launder $50 million from a Panamanian general? The money buys overpriced Nigerian cotton, which is sold to a Dubai trading company, which invests in Miami real estate. 3 legitimate transactions later, clean money. Now you might be thinking, this is too complex. Someone would have noticed. Auditors, regulators, someone. And you're absolutely right. Several people noticed. The first internal complaint happened in 1978, just 6 years after founding. And it reached directly into the hands of the Bank of England. So the question isn't, why didn't anyone discover it? It's, why didn't anyone do anything? And here, things get much more sinister. A former BCCI executive sends a detailed dossier to the Bank of England, the British banking regulator. The document lists accounts not registered totaling hundreds of millions, suspicious transactions with Middle Eastern regimes, and flagrant violations of lending limits. Bank of England's response: no action. The American CIA produces an internal report confirming that BCCI is used by drug trafficking networks for money laundering. CIA's response, filed as low priority. Auditors from Pricewaterhouse, one of the world's largest auditing firms, warn in a confidential report that BCCI's finances don't make mathematical sense, and there is evidence of systematic falsification. Regulators' response: request more audits instead of closing the bank. This isn't incompetence. It's a pattern. So what was happening behind the scenes? Reason 1. BCCI was a geopolitical tool. During the 1980s Cold War, Western intelligence agencies needed to move money for operations that Congress would never approve. The CIA financed the Afghan Mujahideen against the Soviet Union, but couldn't do this through official channels. It would be a political scandal. So they used BCCI. The bank moved hundreds of millions of dollars in weapons to Afghan fighters. No official traces. No congressional approval. No transparency. A former CIA officer testified years later, BCCI wasn't our bank, but it was useful when we needed discretion. Translation: it was our offshore money laundry. British intelligence MI6 and French DGSE did exactly the same. Operations in Africa, financing pro-Western coups, payments to informants, all through BCCI. Reason 2. Diplomatic blackmail. BCCI had something no other bank had: intimate relationships with dictators. The bank managed the personal fortunes of Manuel Noriega in Panama, $23 million. Saddam Hussein in Iraq, amounts not disclosed, estimated in billions. Ferdinand Marcos in the Philippines, $356 million. Samuel Doe in Liberia, $40 million. Closing BCCI would mean freezing those fortunes, enraging dictators who were Western allies, and potentially exposing who else used these services. It was a diplomatic bomb nobody wanted to defuse. Reason 3. Literal regulatory capture. But perhaps most disturbing, BCCI bought people inside governments. Later investigation reveals that BCCI paid over $600,000 in consulting fees to Andrew Young, former U.S. ambassador to the UN and close confidant of President Jimmy Carter. Young's job? Lobbying for American regulators to be more flexible with BCCI. Clark Clifford, former U.S. Secretary of Defense and one of Washington's most respected figures, becomes chairman of First American Bank. What nobody knew publicly: BCCI secretly controlled 70% of First American. Clifford was, unknowingly, he would claim later, a puppet. BCCI now had a former American Secretary of Defense as their facade of respectability. You're starting to see the pattern. BCCI didn't just bribe low-level regulators. They co-opted leaders at the top of the pyramid, people so respected that questioning their association seemed disrespectful. But here's something that will infuriate you. While governments protected BCCI for geopolitical reasons, ordinary people were losing their life savings. Because remember, this wasn't just a bank for dictators. It had 1.4 million ordinary depositors. Retirees in the United Kingdom, Pakistani immigrant families in Birmingham, small merchants in Dubai. Everyone deposited their savings in a bank that literally didn't have that money. Let me show you how the house of cards finally collapsed. Operation Sea Chase. An undercover agent from the American Customs Service infiltrates BCCI, posing as an investor looking to launder drug trafficking profits. He expected to be rejected or at least questioned. Instead, BCCI managers literally taught him money laundering best practices. Divide deposits into amounts below $10,000 to avoid automatic reporting. Use our Cayman Islands accounts, zero tracking. We can structure it as real estate investment for clean documentation, everything recorded on video. In October 1988, federal agents arrest 11 BCCI executives in a simultaneous operation in Tampa, Florida. Headlines: largest money laundering case in American history. Charge: BCCI laundered $32 million for the Medellin cartel. You'd think that would be the end. A bank caught laundering drug cartel money should be immediately closed. But it wasn't. Know what happened? BCCI paid a fine of $14 million, pocket change for them, and continued operating. Why? Because only the American subsidiary was indicted. BCCI's global operation continued untouched, protected by that fragmented regulatory structure I explained before. But Operation Sea Chase opened a Pandora's box. 1989 to 1990, the relentless investigation. A Manhattan district attorney named Robert Morgenthau decided to go after BCCI with everything. Morgenthau was a legend, prosecutor for 30 years, incorruptible, and known for not being intimidated by political power. He started issuing subpoenas, hundreds of them, requesting banking records from BCCI subsidiaries in 15 different countries. And this is where the true scale of fraud began to emerge. Discovery 1. BCCI secretly controlled American banks through proxies, violating federal laws prohibiting unregulated foreign banks from operating in the U.S. Discovery 2. More than $23 billion in BCCI loans were made to people who never existed. They were loans to phantom accounts controlled by the bank's own executives. Translation: they stole $23 billion from depositors. Discovery 3. BCCI facilitated the illegal sale of nuclear technology to Pakistan, Iraq, and Libya, massive violations of international non-proliferation treaties. This was no longer just a banking scandal. It was global national security. March 1991. Auditors from Pricewaterhouse finally do what they should have done 10 years earlier: a complete forensic audit, no restrictions. The report, codenamed Sandstorm, is 200 pages. The conclusions can be summarized in one line. BCCI was criminally structured from the beginning. There's no division between legitimate and illegitimate operations. The entire bank is a fraud. They estimated the real hole in BCCI's books was $10 to $15 billion. For context, in 1991, that was equivalent to the GDP of countries like Nigeria or Hungary. Simply vanished. July 5, 1991. Operation Final Day. At 5 a.m. London time, historically unprecedented coordinated operation begins. Banking regulators in 69 countries simultaneously seal all 400 BCCI branches. Doors locked. Accounts frozen. Executives detained. In Britain, more than 1,000 Bank of England agents take control of branches from London to Manchester. In Abu Dhabi, military forces surround BCCI's Middle Eastern headquarters. In the Cayman Islands, documents begin being confiscated from offices trying to destroy evidence. It was the largest synchronized banking regulatory action in history. And when the doors closed, 1.4 million people woke up discovering their savings had evaporated. Now you'd expect this to be the part where I tell you about justice. About executives going to prison for decades. About governments being held accountable for complicity. But this is the real story, not Hollywood. And what happened next, in a way, is even more revolting than the original fraud. The victims. Pakistanis living in the United Kingdom lost £400 million in collective savings. Many were immigrant workers who sent money to families in Pakistan. Decades of work disappeared. A British retiree interviewed by the BBC in 1991, with literal tears, said, "I worked 40 years as a bus driver. Every penny I saved was in BCCI. Now I have nothing. Nothing." In total, depositors lost an estimated $10 to $15 billion. The compensation process took more than 10 years. In the end, depositors received on average 30 to 40 cents for each dollar they had deposited. If you had 100,000 pounds in BCCI, you recovered 35,000 pounds. The rest evaporated. The criminals. Now let's talk about who was held accountable. Aga Hassan Abedi, founder and mastermind of BCCI, never spent a day in prison. Why? In 1990, he had a stroke that left him partially incapacitated. Lawyers argued he was unfit for trial. He died in 1995 in Karachi, a free man. Suhail Naqvi, operational CEO who oversaw all accounting fraud, was sentenced to 8 years in prison in Abu Dhabi. He served 4 years, was released in 1995, and disappeared from public view. Clark Clifford, the former American Secretary of Defense, was indicted in 1992 for bank fraud, but never went to trial. His defense: he claimed he was deceived by BCCI and didn't know they secretly controlled First American Bank. He was 85 years old. Prosecutors decided that prosecuting a respected octogenarian didn't serve the public interest. Charges were dropped. Clifford died in 1998, reputation tarnished but never criminally convicted. Of the hundreds of executives involved in BCCI's global fraud, fewer than 20 were arrested. Most served sentences of 2 to 5 years. Not a single government official, regulators who ignored warnings, intelligence officers who used the bank, politicians who received money, was criminally held accountable. Not one. The governments. The American Senate finally releases a complete report on BCCI after 12 years of investigation. The conclusions are devastating. American federal agencies, including the CIA, DEA, and Federal Reserve, had substantial knowledge of BCCI's criminal activities as early as 1983 to 1985, but failed to act for reasons that include foreign policy considerations. Official government translation: we knew. We decided to do nothing. The report identifies institutional failures in the CIA, operated through BCCI intentionally. Department of Justice delayed investigations. Federal Reserve approved acquisitions it shouldn't have. State Department pressured regulators to go slow. Consequence for these agencies: zero. No restructuring. No directors fired. No fundamental policy changes. In the United Kingdom, the Bank of England eventually paid £100 million in compensation to depositors, essentially admitting regulatory failure. But no individual official was identified or punished. The reforms. You think a scandal of this magnitude would lead to systemic changes in international banking regulation? And there was some progress. 1992. Basel Committee issues guidelines reinforcing that banks must have consolidated supervision, meaning someone has to be responsible for auditing the entire bank, not fragments. 2001, USA Patriot Act, post 9/11, creates much stricter rules about money laundering and know your customer requirements. So yes, things improved. It would be harder today to replicate exactly BCCI's structure. But 2008, global financial crisis exposes that major banks still operated fraudulent accounting schemes like Lehman Brothers, and no senior executive was arrested. 2012, HSBC is caught laundering $881 million from Mexican cartels. Punishment: fine of $1.9 billion, 5 weeks of profit. 0 executives arrested. 2016, Wells Fargo creates 3.5 million fake accounts to inflate numbers. CEO resigns with $130 million package. 2023, Silicon Valley Bank collapse exposes that regulators still fail to detect obvious signs of insolvency. The pattern: banks too big to fail. Executives too important to prosecute. Frauds compensated with fines that are operating costs. The lesson of BCCI wasn't learned. It was temporarily patched. But there's one last chapter of this story that was never fully resolved. And honestly, it's the part that bothers me most. Mystery 1. Where is the money? Remember the $10 to $15 billion that disappeared? Investigators managed to track and recover approximately $2.5 billion. But the rest, about $12 billion, literally evaporated. Wasn't found in numbered accounts. Didn't appear in confiscated properties. Didn't emerge in offshore trusts. The prevailing theory? It's hidden in layers so deep of shell companies, trusts, and secret jurisdictions that even with decades of forensic investigation, it became irrecoverable. There are fortunes of dictators dead for 30 years, still sitting in digital vaults that nobody can access. Mystery 2. Who else was involved? During the investigation, more than 3,000 pages of BCCI internal documents were classified as state secrets by American and British governments. To this day, more than 30 years later, these documents haven't been declassified. Why? The official explanation: national security and protection of intelligence methods. The unofficial explanation: according to former investigators, the names in those documents are too important. In 2003, a Senate investigator who had access to the classified documents said in an anonymous interview, if the public knew who really used BCCI, not just dictators, but first-tier Western political figures, there would be an unprecedented crisis of institutional confidence. Translation: politicians, CEOs, people above any suspicion had BCCI accounts. And keeping that hidden is more important than transparency. Mystery 3. Does the network still exist? Here's something disturbing. Several former BCCI executives were never extradited and today operate other banks. One documented example: Guy Ferron, a senior BCCI operator who orchestrated the secret acquisition of American banks, fled to Dubai in 1991. He was never extradited. And in 2004, registered a new bank in Dubai. Investigators argue that the network created by BCCI, the relationships, the methods, the channels, didn't disappear. It just fragmented and adapted. It's impossible to prove. But banks in offshore jurisdictions continue operating with structures remarkably similar to the BCCI model. Legal headquarters in one country, operations in another, holding company in a third. The structure that should have been made illegal is still perfectly legal if you know how to set it up. So what do we learn from BCCI? Lesson 1. Complexity is a fraud tool. BCCI didn't hide its criminal operations despite complexity. Complexity was the hiding place. When an organization is so intricately structured that nobody fully understands how it works, nobody can effectively regulate it. And we see this today. Financial derivatives so complex that even banking executives don't understand them. Cryptocurrencies with smart contracts that auditors can't read. Private equity structures with 15 layers of LLCs. Complexity protects fraud. Lesson 2. Too big to fail is too important to prosecute. BCCI operated for so long because closing it would have geopolitical consequences governments didn't want to face. That hasn't changed. In 2008, the American Department of Justice explicitly considered systemic impact when deciding not to prosecute banking executives. When institutions become critically important, whether for economy, geopolitics, or social stability, the law stops being applied equally. Lesson 3. Institutional complicity is more dangerous than individual fraud. Agha Hassan Abedi didn't single-handedly create a $23 billion criminal empire. He needed auditors who signed fraudulent balance sheets, regulators who ignored warnings, politicians who blocked investigations, lawyers who built the legal structure, and correspondent banks that processed transactions. Fraud on this scale requires an ecosystem of complicity. And that should terrify us, because it means the systems that should protect us can be the systems that allow us to be exploited. Bank of Credit and Commerce International, a bank that should never have existed, that operated openly as a criminal organization for 19 years, that was protected by governments that knew exactly what was happening. And when it finally collapsed, only a fraction of those responsible paid any price. The victims? They're still waiting for complete justice 3 decades later. This is the story Hollywood won't tell, because it doesn't have a satisfying ending. Doesn't have a hero beating the system. Doesn't have catharsis. It only has the raw truth: power systems protect themselves, even when that means burying crimes. If this story made you question how the banking system really works, you should. That skepticism is healthy. And if you want to continue discovering these corporate scandals the world forgot, subscribe to the channel. Because BCCI is just the tip of the iceberg. In the next video, I'm going to tell you about the Carrion Group, a Hong Kong conglomerate that defrauded $1 billion and culminated in a murder that was never solved. It's literally a corporate thriller with corpses. Leave a comment. Had you ever heard of BCCI before this video? Because I bet 90% of you never had. And that is exactly the problem. Until the next collapse.